Hello. So in this video, we'll talk about how to create a trading system and what you should consider when making a trading system and what the questions that you have to ask and what are the worst scenarios that you have to be prepared for. So, and also this is the trading system that I'm talking about here is an example of a non-discretionary trading system. So you can have discretionary and non-discretionary both. An example of a discretionary mutual fund is a mutual fund where the manager decides which stocks to buy. An example of a non-discretionary mutual fund is, let's say, a Nifty 50 index fund, where a mutual fund does not manager does not decide anything. He just buys whatever are the stocks in the Nifty 50 universe, and in the proportion that the Nifty 50 index is where shown in terms of how much weight is there, and specific to that weight, a Nifty 50 mutual fund buys those specific stocks. So that's a non-discretionary mutual fund. So this is a simple trading system, which is a non-discretionary trading system. We try to ask a few questions first. First of all is, what do you want to buy? Which are the stocks you want to buy? When do you want to buy them? How much you want to buy them? And when you have to sell. These are the uh, top four questions which you should have answers for when you're making a trading system. So let's say the one which I am giving example right now is, let's say, what you want to buy. You want to buy the 25 stocks which are given the highest ROI over a 3-month horizon. So this is a momentum trading system. You can have a crossover trading system also, or you can have examples of other trading system also. So what to buy is 25 stocks which are given the highest ROI and over a 3-month time horizon. This also 3 months parameter. This is 3-month momentum non-discretionary trading system. And when do you want to buy? You can buy on the first Friday of every quarter. This can be first Monday, it can be first Thursday, it can be first Tuesday. It doesn't really matter. But since it's a 3-month system, you buy once a quarter. How much do you want to buy? You buy equal proportions. All 25 stocks in equal proportions. Let's say you have a 25 lakh investment. So you buy 1 lakh of each stock. And the next is the most dangerous question, and the main reason why mostly people end up losing money. You don't sell at the right time, and the reason you don't sell at the right time is because there's no system telling you to sell. You get married to the stock, you move your trading system, you move your plan. So this is the most important question: when to sell. Let's say when to sell an individual stock. So one of the times that you can sell a stock is in the next rebalance. So this is a quarterly rebalance. In the next quarterly rebalance, if the stock that you have in the portfolio is not in the same mix which has given the highest ROI, then you can sell the stock. The second is on any Friday when the stock price is 20% from the buying price. You don't want to take the risk, or you don't want to sit on the stock which is down by more than 20%, because it takes away peace of mind. So you sell it on any Friday when the stock you see, you check your portfolio every Friday, and every Friday afternoon, if the stock is below 25% from the buying price, you sell it off. And you want to be very specific, then you can sell at 3 o'clock on Friday, 3 p.m. Rule B, while it is optional, uh, it's necessary, because any stock which you have bought and it goes more than 20%, it takes away a peace of mind. So while I've written that it's optional, it's usually recommended to follow it. The other thing is when to sell the entire portfolio. Let's say you have just entered the stock market and there's a huge correction and the entire stock index has fallen, and a lot of stocks in a portfolio are falling every day. So if on any Friday the asset value of your portfolio has fallen by more than 20% from your max asset value, or it has fallen, let's say, on 20% from the portfolio that you built, it's a 25 lakh portfolio. On any Friday that you see the portfolio has fallen by 20%, which is 5 lakhs, then you just sell then all the stocks in the portfolio. And what this gives you the peace of mind. You wait for the next quarter, and on the next quarter you can again build your portfolio. Meanwhile, you can keep your stocks in a cash. The other thing is the investment horizon. So you want to buy 25 stocks, but from where you want to buy the 25 stocks? Here it's up to you. You can buy the top 25 stocks from the NSE 50 universe, 500 universe, 200 universe, 100 universe, whatever you want to do, you can do that. But you have to be aware that the risk is directly a function of the bigger horizon, the bigger portfolio that you take. If you buy NSE 500, the risk is higher. If you buy NSE 50, the risk will be less, the volatility will be less. The worst case scenario is we have covered when to sell. The entire portfolio can be down by 20%, and you have to be mentally prepared for that event to happen. Number of stocks to buy here, I've recommended that possibly you can start from the number of 25. And usually, classical finance and the theory of finance also says that you need a portfolio of 20 to 25 stocks in your portfolio to give a good return. But let's say you are running the system on Nifty NSE 50 and the universe itself is only 50 stocks, then you can possibly buy 10 stocks. And since it's NSE 50, the universe, so the volatility will not be very high. So rather than having 25 stocks, you can possibly have 10 stocks also. I wouldn't recommend 5 stocks because it increases the risk a lot. But it's up to you because the number of stocks you want to buy is a parameter that you decide. So this is a simple trading system and tries to answer all questions. And just to repeat, uh, the most important question is when to sell. When to sell during the time that you have bought a stock in a quarterly cycle. And when the system says that you should sell, it's recommended that you sell it. Thank you.